quite interesting that today we're looking at one of the strategic discussions going around the world today, talking about global oil uncertainty. And in our interview section, particularly the interview section is our discussion segment that will be focusing on this particular global dynamic nexus of oil price, attracting investment to Nigerian oil and gas sector. Meanwhile, Dangote is gaining momentum as its refinery is being said to be impacting Nigerian domestic refining capacity, and also exploring local petroleum product price volatility. Global oil prices are currently experiencing fluctuation due to a combination of supply and demand factors, as well as geopolitical tension, where some forecasts suggest price will remain under $70 per barrel. Others point to a potential increase driven by outgoing conflict and other uncertainty. On the other hand, global economic growth and slowdown directly impact the oil demand. Conversely, OPEC and other of its members have a significant role in influencing global supply production quotas. And current events such as the Israel-Iran conflict also introduce a risk premium into oil price due to potential supply disruption. Unfortunately, global oil production capacity is expected to increase, particularly in natural gas liquid and other non-crude liquid, which could influence fuel price trend. Seriously, investors' risk aversion and broader market volatility, as well as reflected in the indices like VIS, can also affect oil price. Sadly, government policy, economic institutions, and the nature of political regime are also playing influence on countries who respond to oil price volatility. Back home here in Nigeria, President Bola Ahmed Tinubu reform the oil and gas sector is attracting applauses and commendation from energy experts and business investors, especially the goal to attract more investors into Nigerian oil and gas sector with key strategies to include strengthening regulatory framework, offering targeted incentive, improving infrastructure, and fostering a stable, predictable business environment. For instance, the recent reform like the Petroleum Industrial Act, PIA 2021, an executive order, presidential executive order that aim to liberalize the sector are attracting foreign investment. But energy experts in Nigeria, particularly in oil and gas sector, have said that the government will need to back the ongoing reform in the sector with incentive to attract investors. On the other hand, however, local investors like Dangote Refinery impact on domestic refining capacity is also demonstrating quicker and critical capacity within a positive growth trajectory, marking an increased domestic refining capacity so that Nigeria can reduce its reliance on foreign import and a significant contribution of Dangote to Nigerian GDP. The Dangote Refinery is projected to reach a full operational capacity by the end of 2025, processing over 100% Nigerian crude, and is already impacting the economy landscape in a way to reduce Nigerian dependence on imported of kerosene, diesel, and aviation fuel. Notwithstanding, we have local petroleum product price dynamics that are not without their own challenges, particularly of which primarily driven by global supply and demand, as well as economic growth being a major factor of influencing demand, such as production level, geopolitical events, as well as market sentiment. I will repeat, market sentiment that are causes of fluctuation in the price. And this fluctuation in turn impact economies, with some studies showing a link between petroleum product price and inflation. You can't take that away from Nigeria. Here in Nigeria, the moment the PMS price goes up, you already know that certain indices in the economy will definitely react to it. One of such is food and transportation costs. Joining me today to help us illustrate some of this issue in the background of our introduction is Jeremiah Olatide, CEO of PetroleumPrice.ng, who will be helping us to understand the reason, the global tension, the global dynamics, the nexus between petroleum prices and local prices here in Nigeria. And not to forget, Dangote ever impact on domestic refining is also gaining momentum. How did it get to that level? How did they achieve this momentum at this time? And not to forget also, President Bola Ahmed Tinubu reforming the oil and gas sector. The presidential reform that brought leverages in the area of investment with Nigeria. Joining me right now is Jeremiah Olatide. Very good day to you, Mr. Olatide.
Thank you so much for having me.
I understand. All right. So interesting and so instructive to have you on the show today. I know you must have listened to part of my intro so far, But
Yes.
first and foremost, let me ask you, how has been your assessment of global oil dynamic at this moment?
Yes. Thank you once again for having me. And the global markets, oil markets, has been a reflection of the tension, the geopolitical tension that we've had lately between Iran and Israel, and also the demand and supply indices, and basically the tariff from the US to several countries of the world. So those three factors are the main factors that are driving global crude oil prices as I speak with you. Recently, we had the Iran and Israel saga, and it surged crude oil price with over 10% in a day. The last time that happened was in April 2022, between the conflict between Ukraine and Russia. That was when we had that surge, that 10% surge in a single day. So it shows that when there is conflict, the surge gets so high that you see a surge in a day. In a day, you get a surge of like 10%. And when you have that kind of surge, it affects various aspects of the economy. Some aspects negatively, some aspects positively. But in the Nigerian context here, when you see crude prices going up, expect our local prices to also go up. Every crude oil price will definitely reflect on our local price, because partially 50% of our petroleum product is being imported, and the 50% that is gotten from Dangote still source 70 to 60% of its crude abroad. So definitely for every global crude oil surge or decline, we would have that same, it's going to have that influence on our local prices here. So basically what has been happening is, in the last few days, we've had fluctuation between $68 per barrel to $70 per barrel. It has been moving up and down due to several factors. Few days ago, we had that OPEC Plus would be having a meeting on Saturday. That was July 6th, and they are planning to increase production. Because of that singular factor, traders, or global oil traders, started dropping prices because they are scared that OPEC Plus the members of OPEC Plus will increase production. Just after then, we also had the fears of Iran and Israel again. Before you know it, the price also surged. So those factors are not really good to our Nigerian factors here, because Dangote has increased prices the 11th time this year, and that is not good for our economy. Increasing and reducing prices every now and then, it destabilizes small businesses and destabilizes even the economy. So I think as soon as Dangote has a plan to stop importation of crude oil by the end of this year, he said by next year, looking at the fact that so many of the pre-sales that the previous government have done will be expiring towards the end of this year. And as soon as it ends, Dangote would have access to local crude 100%. And with that, that means global prices will not be having influence on our prices, because the deal is a naira for crude deal, and it is not tailored towards the global, though it's sold with the normal benchmark, the normal benchmark, yes. But at the same time, we have other local factors, just like the naira for crude deal, and other credit facility that will be given to Dangote and local refineries. With that, it will help stabilize our local prices in Nigeria.
Exactly. But still staying on a global aspect of our discussion, particularly the global nexus connection of oil price and instability that comes. Let's go back to the OPEC meeting that has happened on 6th of July, this last Saturday. And I also understand that with that effect of that meeting, OPEC on their own, I'm beg to ask this question. Is it that they didn't make any mention of increasing their quota and they didn't make any mention of reducing the quota, but how come that effect has a deliberate action on the price of crude across? What I'm trying to ask is that because of just that meeting alone, a lot of rigmarole happened in the global oil price, and that effect is what we are seeing today. As of today, I can authoritatively tell you that OPEC price is now at $71 per barrel. But from your own understanding of this global trend, how is just a meeting now having an effect without making any pronouncement? We are having this shake on the global oil price across the world.
Yes, well, technically, the major factor that should determine price of any product anywhere in the world is demand and supply.
Exactly.
Any product anywhere, either oil or non-oil products, the major factor that should determine price is demand and supply. And in the global markets, the major factor is demand and supply. Thereafter, you have tension, tariff, and all. But the major factor that determines price is the demand and supply. And the function of OPEC is to regulate supply and regulate prices. That's the function of OPEC. If not for the tension we've been having, the tariff war and all of that, the hallmark or the benchmark for prices should be demand and supply. Now, the reason behind several meetings between either OPEC or OPEC Plus for supply, for increasing supply, is to stabilize the market forces. Because when you look at it, demand of crude oil continues to grow. Immediately the COVID-19, we ended the COVID-19, the demand has been growing. And OPEC needs to work towards matching supply with the demand. If not, there will be crisis. So if they don't match supply with demand, the prices might even hit $150 per barrel. So regularly, they must always come and have a meeting that, member countries, you need to step up your production. So the demand for crude oil will be met. They are just like an organization that tries to make sure that there's stability in the oil market. Looking at the demand, as soon as they evaluate that demand of oil is rising, they call their members that you need to increase supply. So there will be a balance. And prices would be at a very reasonable level. So that is why you see those meetings coming regularly. So traders, when such meetings are coming, you see it's natural that you have fear. Even in your local market here, when traders around the depot, station owners, gets to be hear news that at the depot is about to shut down. This won't happen at the depot. You see fears. You see people increasing their price or reducing their price. So that's what's playing out in the international market. That when they start hearing fears that they are planning to have a meeting and most likely they will increase production, you will see tension and fears and price will start dropping. Traders will start reducing their price and price start dropping. So that is just the arithmetic behind the global oil prices relating to OPEC calling for regular meetings to assess their output and to see how they could increase output to meet up with demand. And sometimes when they see that their supply or their output is higher, they also call for reduction. That you need to reduce it because they need a balance. The essence of OPEC was founded in the 60s just to regulate global prices, because they realized that some countries of the world are beginning to take advantage of prices, and take advantage of prices. So they came together to say, okay, we countries that are producers would have an association or a union where we will determine our price ourselves through regulating demand and supply. Because we have told earlier that demand and supply is the major factor that determines price in every market, either oil market or non-oil market all over the world.
Exactly. Now, talking about the arithmetic behind it, Donald Trump, when he came in, we all thought that with his fearful statement on WTI, which is the Western Texaco oil of United States, that's going to pump the global oil market with his WTI. But much of it have not been seen to be very effective to even put to check OPEC or even put to check the price of crude oil. So what will you say about Donald Trump? Are you saying the forceful statement that is going to pump American oil into the global oil market is not making any headway at all in this regard at this point in time? Because we expect that with WTI, it can also put pressure on OPEC so that this price balancing that we are talking about right now can really be achieved, not just from one angle, but with both sides of American pumping their own oil to the global oil price.
Yes, we all know that USA is one of the biggest player in the global oil market. The WTI, which is basically the West Texas Intermediate Oil, plays a very important role in the global output or the global supply of oil. And Trump has been very vocal that oil prices must go down. He is of the opinion that oil prices should drop, and as soon as oil prices drop, he is going to help the economy grow. So he's of the opinion. So definitely, Trump is a factor in this oil global price saga. OPEC is another factor. OPEC Plus is also another factor. So those are major blocks. And the tension, yes, and the tension between the long-standing tension between Ukraine and Russia, and also the latest one between Israel and Iran. Those are major factors that plays out. But what happens is that the oil prices are volatile. Today it is up, tomorrow it is down. So all these factors I just mentioned, they have their input in prices of oil, global oil. They have their input. Sometimes Trump comes up, just a singular statement that Trump made yesterday. It's affected prices. He threatened that he is going to sanction China and all of that. Because of that singular factor, price dropped 2% just yesterday, from $70 to $60. This morning, it's rising already. It's close to $70 or $71 just this morning. So it's not so volatile. For every little input that I mentioned, the Trump factor, the OPEC factor, the OPEC plus, the geopolitical
we're having a freeze there with
all of those factors plays out, and it was negatively on the global crude oil price.
Bye-bye. So let's come back home, Olatide. Let's check Nigerian oil and gas environment. Particularly, attracting investment to Nigerian oil and gas sector has become one of the focal points of President Bola Ahmed Tinubu. And the PIA that we have on ground and the presidential executive order on oil and gas sector has become so applauded by many experts like you and I in this particular sector of the economy. But what's your assessment of the PIA and the presidential executive order on oil and gas so far? What's your own view on it?
Okay, well, basically, the PIA is an excellent project. You know, the PIA has been processed as it came into effect in 2009. The bill was drafted and submitted in 2009, and it took them close to a decade, I think 11 years. 11 years, between 2009 and 2021. So it took them 11 years to sail through that bill and turn it to an act. So the bill has helped to enhance the industry, particularly the foreign direct investments. And lately, we've had over $17 million foreign direct investment coming into Nigeria. It has helped. You see Section 5 of the PIA talking about processes of how they could attract the foreign direct investment. You go to Section 62 that talks about the royalties that they will give to foreign investors. You go to Section 63 that talks about taxation. You go to Section 300 that also talks about how to enhance and support foreign investors. So the PIA has really helped largely to attract foreign investors and to enhance our industry. But we need a whole lot. It has done well, but I still feel there is room for improvement.
Is that talking about improvement? Energy experts have suggested incentive for investors. On your own part, not that incentive is lacking when it comes to supporting investors to come into Nigeria, but in the oil and gas sector, what form of incentive are we really talking about? And do you think that this will really attract investors to Nigerian oil and gas sector?
Yes, incentives are key indicators globally that attract investors. Because when you are trying to attract investors into your economy, you need to give incentives, tax incentives, and all of that. So those factors are a welcome development when you are going into or trying to attract investors. You need to have several incentives, and in the upstream, I am aware that there are several incentives given to investors coming into the exploration space. And over time, I know it's going to play out. The 2.5 million barrels per day and the 3 million barrels per day that is supposed to be achieved in 2027 and 2030, we should be able to see it play out with those incentives that are given to foreign investors.
Very interesting. Let's now take a very critical aspect of this discussion, going into Dangote aspect of it. You know, many people have applauded Dangote for taking that bold step, building his refinery, and going into domestic refinery. One particular applaud that many have attributed to Dangote is that the local capacity has now been boosted up. The local capacity has now been increased. But from your own understanding, Dangote coming, has it become the game changer in a local domestic refinery in Nigeria?
Okay, well, personally, I'm just going to express myself in my own way.
Exactly.
I know we have varying thoughts, varying views on this Dangote saga, the Dangote and the private depot and the importer saga. But for me, the Dangote Refinery is an excellent project. It's an excellent project, and it's a project that Nigerians should embrace. Yes, because the project has helped reduce importation of petroleum products. Before Dangote started, Nigeria used to be the highest importer of petroleum products in Africa. Now we've been overtaken by South Africa because of the Dangote factor. Because of the Dangote factor, we can now buy fuel, that's petrol, for 880, 890, 900, 910 thereabouts. We can buy diesel 1,000, 1,001. Before Dangote came, diesel surged. Diesel rose to 1,400, 1,500, even 1,700 in some places. Because it was a free for all for the importers. The importers are just doing what they like. But with the coming of Dangote, it has created room for intense competition. No more abnormal profits. No more free money in the industry. Everybody needs to wear their thinking cap and innovate. And there's intense competition. And because of that, it has helped to regulate price. And you know, the president said something that over time, market forces would regulate our prices.
Exactly.
That as soon as the market forces start playing out, the demand and supply, the competition, prices will regulate and drop. And we are beginning to see it play out. That subsidy should go. That if subsidy goes, though the price might be high initially, but with the incoming of Dangote and the intense competition between Dangote Refinery and other importers and private depot owners, it will bring about stability. And that's what is playing out. As I speak with you now, the price war is highly intensified between Dangote and the importer. 2-3 days ago, Dangote dropped its ex-depot price from 840 to 820. Less than 24 hours, the private depot also dropped theirs too from 840 to 820, 821.
That's very intensive.
The prices are back. So they are trying to make sure that Dangote does not take beyond the 50% market share. But ordinarily, those importers will not do that if they don't have intense competition from Dangote. In short, if not for Dangote, we will be buying petrol, that's PMS, between 1,001 and 1,002. But the intense competition between Dangote and the importer is good for the end users. End users would continue to buy lower price over time. So now I speak with you, anytime from now, Nigerians should expect further reduction from Dangote. Because Dangote has a very big project coming up next month, the August 15 distribution project.
Exactly.
And one of the strategy is that he wants to attract retailers, manufacturers, companies, station owners all over Nigeria that, we can supply you petroleum products down to your doorstep with free logistics, zero logistics. And he's spending 45 naira. His cost for logistics per truck is like 45, between 30 naira to 45 naira per truck anywhere in Nigeria. So he is bearing the cost of 45 naira per liter for the logistics to supply petroleum product all around. And for him to achieve that, his prices must be lesser. You know, in economics, there's what we call penetrating pricing policy.
Exactly.
Those retailers are used to going to the depot to buy, and they buy and they take to their station. Companies that use diesel, they are used to getting it from suppliers. So if Dangote is saying, I have 4,000 trucks that will be touring everywhere in Nigeria to supply you petroleum products, you must be able to drop prices. But currently, as he's dropping prices, the depot owners are dropping prices because they don't want to lose the customer base. They don't want him to be able to achieve that plan of supplying petroleum products from the refinery down to the retailers, taking off the wholesalers. That's the depot, because the depot in this space, they are the wholesalers. Because the chain is supposed to be refining, depot, and the filling station.
Exactly.
You refine, you ship the products to the storage facility, and you now take them to the filling station. But now Dangote is jumping that, is scaling over that segment of the wholesale and saying, from the refining aspect, from the manufacturing aspect, we are going to transport or sell to you directly to retailer. So you understand that there will be conflict of interest.
Exactly.
And all of this, it will be a plus to Nigeria.
Exactly.
Over time, prices might even drop to 750, 700 as soon as they enter into this phase that are going to happen. Because as soon as they start in August 15, the first 2-3 months, they're going to be heated war. Because 4,000 trucks is a whole lot. 4,000 trucks means I want to take 70% of the petroleum market. 4,000 trucks means...
But Olatide, for you, for Dangote to take 70% of the market, is it not the good of Nigeria? Is it not for the good of people like us who consume PMS products, kerosene and the rest of it, so that we can have an easy and affordable access to this product?
Come again.
I'm asking for him to take 70% of the entire oil and gas sector retail aspect of Nigeria. Is it not for the good of the ordinary Nigerians? Because the Shylock depot owners and importers for years have made billions upon billions on us, especially the FX issue that CBN have been able to resolve particularly. So is it not a good way to go?
Okay, well, basically, I said it earlier that it is a good initiative. Whichever initiative Dangote is coming up with is a good initiative. But the space for competition must also be there.
Exactly.
You mustn't allow him just take over the market completely. For me, I would still want the importers and the private depot owners to still go ahead on with him. With that, it is going to strike a balance.
Exactly.
Because all over the world, all over the world, for countries, top countries of the world to achieve energy security, they blend local refining and importation. So we must still allow that space for importation. It might just between 10-20%, so that there will be a balance. And with him coming on board, I know the private depots have been having meetings lately, the marketers have been having meetings lately to see how they could measure. But by and large, the most important thing is that we mustn't allow Dangote to take over the market 100%.
But let me also come in here. We also have about 15 modular refineries that are also crying for crude oil, local crude oil to refine. If those 15 of them come on board, in addition to Dangote, will they have the 70 to 80% of the market?
Yes, it is a good one. But if you look at the capacity of those refineries, you see 10,000 barrels per day, 20,000 barrels per day. Some of them are not even very efficient.
Exactly.
Unlike the Dangote Refinery, they are not completely efficient. They are not completely functional. So what we should be looking at is the Boa Refinery that is coming up later this year.
Exactly.
That has 200,000 barrels per day. Yes, and secondly, there have been recent call for privatization of all our refineries, our four refineries, the old Port Harcourt Refinery, the new Port Harcourt Refinery, the Kaduna Refinery, and the Warri Refinery. That it should be privatized, or there should be a PPP arrangement, public-private partnership. That with that, those refineries will be up. Dangote this morning, there was a news that was everywhere that Dangote said.
I heard the news before you break it. I also heard the news that he's saying that those refineries can never work again. What's your reaction to that?
Yes, for me, he is making some valid points. He said those refineries are outdated. That is why you see them spending billions of dollars, millions of dollars on those refineries, and they are not coming up. That number one, those refineries are outdated. You see refineries of 30, 40 years ago, and you see them rehabilitate today. In 3 months' time, it is down. Two, he mentioned corruption. That during Buhari's, during Obasanjo's time, Obasanjo sold those refineries to them. And as soon as Yar'Adua came on board, he said he reversed it. That it was a wrong step that Yar'Adua has made. That if you look at refineries all over the world, they are being managed by private entities. Efficient refineries all over the world. Top refineries are managed by private entities. And those refineries, over time, they will be sold scrap. They will be scrapped out. Care is not taken. And if you look at it, what he is saying indirectly, and the only solution for what he's saying indirectly is to privatize them. If you keep these refineries in the hand of public officers, we will keep having stories like this. So I am of the opinion that our refineries must be completely privatized, or there should be a PPP arrangement, and with that there will be stability in the downstream oil and gas sector.
Exactly. No, very fantastic for me. But let's go ahead and look at the tankers price of today, because you have to give us the price of what is happening across Nigeria, talking about PMS price, kerosene price, and diesel price, and not to forget the aviation price as we go on. So give us details or update on what is happening to all the prices of these petroleum products across Nigeria, from the depot to the retail outlet. Help us with that right now.
Yes, so thank you. As I speak with you as of today, the depot or the wholesale price in Lagos is 820. The price in the PMS price in Lagos is 820, 821 across all depots in Lagos and Dangote. And when you get to Warri, the price is 855, 856. When you get to Port Harcourt, the price is 860, 870, and in Calabar it is 860. So in Calabar axis, Port Harcourt axis is a bit higher because they are not close to the refinery. And most product that comes to Nigeria comes through the Lagos port before it starts going to the Calabar port. So all of those logistic expenses has up and make them sell higher. And lastly, they don't have the market that Lagos has. Lagos has a high market and it's a high level of turnover than the Calabar and the Port Harcourt market. And if you go to diesel, as I speak with you, prices are dropping. Lagos, I speak with you, in Lagos, prices of diesel are even less than 1,000 naira. 998, 999 at different depots in Lagos. When you go to Warri, the price of diesel is between 1,030 naira, 1,020 naira. When you go to Port Harcourt 1,040 naira. So stations all over Nigeria should not sell beyond 1,100 diesel price. 1,100, 1,150 naira. And I think that is reasonable because the difference between the depot price and the retail price should not be more than 70 to 80 naira, considering the location. If it is far north, we would say 70, 80 naira. But if it is down south here, it should be more than 50 naira between the depot price and the retail price. But hopefully, with the framework that Dangote has put in place, having retail outlets all around, they've helped to cut prices. Because when Dangote is saying, "Oh, all our affiliate stations must sell these prices," it keeps other stations, independent stations, in check. Because if you have MRS that has over 300 stations in Nigeria, Adova that have over 300 stations in Nigeria, and you have all of them, and there is a network that all of them must sell this particular price. So it pushes independent stations to drop their prices. So that framework is also working. Because when you see MRS selling a particular price, independent stations will not be able to take advantage. Because they know if ours is higher, people will not patronize us. So that framework by Dangote is an excellent one. It will help keep the retail prices in check, because the retailers are they are another devil in this industry. If they are not properly checked, they might also want to take advantage of Nigerians. So, but with this framework of Dangote having a network of stations all around Nigeria and them having a unified price, would help those independent stations to keep their prices in check and stop them from making abnormal profits.
Exactly. Now, Olatide, I'm so glad to have you on the show today. It's quite interesting that your submissions are very laudable, particularly helping us to explore local petroleum product price volatility. And as Riley said, from the north to the south or the south to the north, we have a different price template that all retailers are giving us. So thank you for coming on the show today, and we hope to do yours soon.
Thank you so much. It's my pleasure. Thank you so much.
All right, now. So we'll see you soon on the show.
Yes, it's my pleasure. I would love to be here some other time.
All right, now. Thank you.
Yeah.
So enjoy the rest of your day in Lagos.